Okay, so I'm going to crack on with the pound ord in this particular video. I've picked some some later years, just after COVID strikes. Probably going to get the second lockdown, I'd imagine, somewhere in here. I haven't studied the intricate moves, however, so this video is still valid. It's not like I'm sort of sitting here knowing what exactly is going to happen next, because I'll be taking a lot of entries anyway, and I'll be hedging out of the cycles. So, if I knew exactly what was going to happen, I would just leave everything on likely over time. But anyway, just for the purpose of showing you how you would manage this, I'm going to start off with a light long, because this pullback is not completely near this 20 and this 40 MA. I'm going to add two more of those as you dip a bit more. And then I'm just going to simply kill that one. And you can see, again, I'm keeping sizes very low. As always, you're not going to survive hedging if you don't keep those sizes low. It just won't be possible, because simply your drawdown is going to raise too fast for you to maintain it. So that basically means, in a scenario where you don't get a lot of hedge opportunities, which is going to happen at some point, it's not existential, you can still survive that. But if that does happen, and you are simply going further and further underwater with your entries, you might not get enough hedge opportunities in a quicker period to basically work out of what you've got wrong. So just remember that. And also, you could be running various assets with this low risk structure to pick up the gains. So I'm just going to kill all those longs. Okay, we're out again for gains. So picking up some smaller profits, again, kept sizes very low. I'm just going to add three of them there. And then I will close that one. I will close that one. And I will close that one out as well. So I can add another. I mean, I was only clicking 0.05 just because I'm lazy. Otherwise, I'd have to type 0.2 for four of them, for example. But I can just kill that one out for gains. And because the price is very low on the long-term scale, if you zoom out, it looks like this. I'm just going to stick a light short there as well. So I can take that one out, take a couple of longs. This is what I mean. I'm using the daily in a lot of these videos now, because a lot of people have asked me to, rather than just simply swing trading. And that's a good push. So I'm going to take a hedge long at 100% of that former light one, just in case that momentum continues. I'm now going to add another light short just to make it 0.1. And now I'm just going to, I don't really want to have a loss. There you go. I'm going to take that off. Add another three of those to make a 0.25. Kill that one off. Kill that one off. And I'm just going to take a light short hedge in case you don't, in case you fall like this. Okay, not got much there. So I'm just going to take those off. And because I added a light short there, those longs I've just closed effectively hedge out that short. So I'm going to take another one light, just because it looks like you're getting a lot of momentum here. I'm going to take that one off. I'm going to hedge this one at 100%, just in case you keep rallying. Okay, we didn't, but I do like this as a long zone, and I am going to exit that for a loss, 16 cents or whatever. So buy three of those. Really strong long zone, I would say there, because you've got a mixture of MAs and key price action levels as well. So take those off. Just take a light short in case. Okay, great. That fell. So that's a good example. I'm getting back $71. This is 82 down. So essentially, I'm only $11 on that long. And now I'm net gains, because if I close that out, I can use the short gains I just took for profit. So nice, simple concept there to grasp. At this point, the market has moved not massively. Okay, maybe a range of 400 or 500 pips. But I would expect, being the pound odds, you would get something significant at some point to the upside or the downside, whichever way it goes. Doesn't matter. I was reiterating that to our members yesterday. You don't really care what way it goes as long as you're taking entries. You're a deal maker, essentially. That's your job. So see a light push here. I'm just going to take a long hedge just to cover that other risk on that short. We didn't keep rallying, and I think at some point we'll burst up, because you're seeing more and more momentum, and those MAs are catching up, and now you can see a bit of consolidation for what is an uptrend, okay, and becoming a more steep uptrend. So I'll take a light short again there. Now we're pushing up much higher. I probably want to see if I can get out of it. Okay, great, fantastic. I'll take 4 of these. Okay, and nice long zone again, like I said before. I'm going to take another one there. And let's have a look. So a lot of the time markets will do this, which is quite handy. But you can now see I'm picking up a bit of drawdown because I'm going against my longs. So I can take a couple of these out, long out there. And again, like I said at the start of this video, you know, I can make the cycles tight. In other words, I can exit early, take that one off. And bullish momentum's coming in. I'm just going to add 3 of these. Nice gains there, which will hedge out that short. Okay, so we're picking up a lot of gains here. And like I said in my last video, you know, there are going to be times where the markets look like this. That's when you're going to pick up a lot of gains. And if the market does extend away from you, you could even just consider spending them to remove some of those entries if you don't want to do the work for hedging. You know, if you've got a high enough hit rate, you don't really have to worry about that. But that's only going to happen if you've got the price action rules. But you can see, you know, continually my hit rate is so high that I don't really need to worry about what happens now, particularly. As long as I keep the sizes low, I shouldn't have a problem trading this asset anytime going forward. So I think the takeaway from this video is really, you know, when markets are like this, to, you know, just be, you don't have to be necessarily aggressive because you don't know how long it's going to last. But, you know, you want to be picking up gains just so you can use them later if you have to, if this breaks to the upside. So I can take that out, okay, take that out as well. So another, I think I've got 0 losers at the moment. And now we might get in a situation where we can start to take some hedge longs because price is bursting a bit. Okay, going up and up and up. So I can add another short. And on a big dip, I can look to close some of this out. So I'm going to take, I've got a long there that I probably shouldn't have. Anyway, there's a couple of them there. It's not going to affect it overall. We can probably take a couple of $100 off. But I've just washed away one of those shorts, just in case we keep rallying. I'm going to take a long, just to hedge that former short there. And now I'm just being a bit more protective about the chance of continual rally. So that's why I can kill this one off with the gains I've taken already. Take that long off as a hedge, take that short off, and that short off as well. So now we've had a larger drift, 176 to 184 or so. We've got no drawdown at any time. Okay, yes, we can take $200 off that. But you can see, you know, overall, practically 100% win rate, I think. I don't think I closed out my last trade. So that's why I might say that. But really, you want this trajectory. And you can do that over the course of, you know, 800, 900, 1,000 pips quite easily, like I just did. If the market does then stretch, you know, we can use the gains we've taken just to limit the drawdown until we get back to normal. And then you'll see the profit trajectory will just continue. Remember, with hedging, you know, if the market does get very steep, you don't have to spend those hedge gains you've got. They will just buffer your equity, essentially. So you don't have to worry about going into drawdown. So enormous win rate, nearly every single trade pretty much. And that's the beauty of hedging as well. Your win rate is going to go up massively because you're not stopping out. So thanks for watching. Hope that helps. Don't forget you can learn underneath, and I'll see you in the next one.